If you're looking to grow your wealth but aren't sure where to start, you're in the right place. Two powerful investment strategies, crypto and real estate, can, when combined, help you double your wealth. Now, I know that both crypto and real estate can seem intimidating at first, especially if you're just starting out. But don't worry, by the end of this video, you'll have a clear understanding of how these two investment opportunities can work for you and why diversification is the key to building long-term wealth. Let's start with a quick explanation of what diversification means, because this is at the heart of today's topic. Diversification is a simple concept. It's about spreading your money across different types of investments. This helps reduce the risk of losing everything if one investment doesn't perform well. Imagine you have a basket of eggs. You don't want all the eggs in one basket. If that basket falls, you'll lose everything. But if you spread those eggs across multiple baskets, let's say stocks, real estate, and crypto, the fall of one basket won't hurt as much. Now, crypto and real estate are two very different investments, but together they can give you the best of both worlds. Now, you might be wondering, why combine crypto and real estate? Aren't they completely different? Well, yes, but that's exactly why they work well together. Let's break it down. Number 1. Different risk levels. Crypto is exciting but risky. Prices can shoot up quickly, but they can also fall just as fast. However, it offers a huge potential for growth. On the other hand, real estate is usually more stable and predictable. It might not give you sky-high returns in a short amount of time, but it can provide steady income and long-term value. By investing in both, you're mixing high risk, high reward with steady, low risk. This way, your portfolio has more balance. Number 2. Hedge against inflation. Both crypto and real estate are considered hedges against inflation. Inflation means that the cost of goods goes up over time. Real estate tends to appreciate as property values rise, and rents can increase with inflation. Meanwhile, some types of crypto, like Bitcoin, are also seen as a store of value, similar to gold, which helps protect your wealth from inflation. Number 3. Cash flow plus growth. Real estate can give you passive income from rental properties or real estate investments, while crypto offers potential for growth through price increases or passive earnings, like staking. By investing in both, you can enjoy steady cash flow from real estate and high growth potential from crypto. Let's start with crypto, since that's where a lot of beginners are excited to jump in. I'll walk you through the basics, step by step. 1. Pick a platform to buy crypto. To get started with crypto, you'll need to sign up for a platform where you can buy and sell digital currencies. Some popular and easy-to-use platforms include Coinbase, Binance, and Kraken. These platforms let you buy crypto with your regular money, like dollars or euros, and they're beginner-friendly. 2. Choose your cryptos. When you're starting out, focus on a couple of well-known cryptos, like Bitcoin, BTC, or Ethereum, ETH. These two are the most widely used and trusted, but don't rush to buy tons of different cryptos right away. Start small and learn as you go. You can even start with just a fraction of a coin if you don't have a lot of money to invest. 3. Hold and learn. In crypto, there's a popular strategy called hodling, which means hold on for dear life. This means you buy crypto and hold on to it, expecting the value to grow over time. Don't panic if prices drop. Crypto can be volatile, but over the long term, it can be very profitable. 4. Earn passive income with staking. Once you've bought some crypto, you can earn passive income by staking certain coins. This means you lock up your coins for a set period to help the network function, and in return, you get rewards. Some platforms like Coinbase and Binance allow you to stake your coins and earn interest on them, much like earning interest in a bank account. Next up is real estate. Real estate investing doesn't have to be complicated, and you don't need to buy a house to get started. Here are a few ways beginners can invest in real estate. 1. REITs, real estate investment trusts. If you don't want the hassle of buying a property and dealing with tenants, you can invest in REITs. These are companies that own and manage real estate, and they allow you to invest in real estate by buying shares on the stock market, just like buying a stock. REITs pay dividends, meaning you get paid a portion of the profits from the properties they own. 2. Real estate crowdfunding. Another way to get started with real estate is through crowdfunding platforms like Fundrise and Realty Mogu. These platforms let you pool your money with other investors to fund real estate projects. You can start investing with as little as $500, and it's a great way to get exposure to real estate without needing a ton of capital. 3. Buy a property to rent. If you're feeling a little more adventurous, you can buy a property to rent out. This gives you passive income each month from tenants paying rent. Many people start with a single-family home or a condo, and over time they build a real estate portfolio. But be mindful, this requires some upfront capital and can come with management responsibilities like maintenance and dealing with tenants. 4. House hacking. If you're new to real estate and want to start small, consider house hacking. This involves buying a property, like a duplex or triplex, living in one unit, and renting out the others. It's a way to earn income from your property while also having your own living space. Now that you've learned how to start with crypto and real estate, let's take a deeper look at how to diversify within each investment category. Diversification isn't just about having a mix of crypto and real estate. It's also about making sure you diversify within those categories. Diversifying your crypto portfolio. When you first get into crypto, it might be tempting to put all your money into one asset, like Bitcoin. But to reduce risk and increase potential returns, it's a smart move to diversify within the crypto market. For example, you can hold Bitcoin for long-term stability, but also consider adding other assets like Ethereum, Binance Coin, BNB, or even some altcoins that show promise. Keep in mind that some altcoins carry higher risks, but they can also have higher rewards. Staking multiple cryptos. If you're looking to earn passive income through staking, it's a good idea to spread your investments across several coins that offer staking rewards. Not only does this increase your exposure to different projects, but it also maximizes your chances of earning rewards. Platforms like Binance and Kraken offer staking for various cryptos, so look for those that offer the best returns while balancing risk. Stablecoins for stability. One of the ways to add some stability to your crypto portfolio is by including stablecoins. These are digital currencies pegged to a stable asset, like the US dollar. Tether, USDT, and USD Coin, USDC, are examples. While they don't offer huge gains like Bitcoin or Ethereum, they're a safer option during times of market volatility. Let's talk about how to leverage real estate to generate consistent passive income. Many people think you have to buy multiple properties or deal with tenants directly to benefit from real estate. But that's not the case at all. REITs for passive income. As we discussed earlier, real estate investment trusts, REITs, are a great way to start earning passive income from real estate without owning physical property. But how do you take it to the next level? Many REITs focus on specific sectors, like residential, commercial, or industrial properties. If you're looking for steady income, consider investing in REITs that focus on diverse commercial properties, such as office buildings or retail spaces. These properties often provide more consistent cash flow than residential REITs. Crowdfunding and syndications. Another option for generating passive income is through real estate crowdfunding platforms. These allow you to pool your money with other investors to fund large-scale projects like apartment complexes or commercial buildings. While these investments often require a longer time horizon, they provide opportunities for substantial passive returns. Check out platforms like Fundrise, Realty Mogul, and CrowdStreet. Short-term rentals, Airbnb. If you prefer hands-on real estate investments, consider using your property as a short-term rental on platforms like Airbnb or Vrbo. Depending on location, this can be an excellent way to maximize rental income, especially if you own property in high-demand vacation areas. However, make sure you're aware of the legal and tax implications before you get started. Now, let's talk about the importance of a long-term strategy when combining crypto and real estate. Building wealth is not about trying to get rich overnight. It's about making smart, calculated decisions that pay off over time. Here's how you can approach it. Long-term buy and hold strategy for real estate. Real estate is a fantastic investment for those looking to build wealth over the long run. Historically, property values tend to increase steadily, especially in high-demand areas. By purchasing real estate with the intention of holding it for years or even decades, you can take advantage of appreciation, tax benefits, and rent increases over time. Think of it like planting a tree. The longer you let it grow, the more it will bear fruit. Diversified crypto portfolio for long-term growth. Just like with real estate, having a long-term strategy with your crypto investments is essential. While it's tempting to chase the latest trending coin, the most successful crypto investors tend to hold a mix of well-established coins like Bitcoin and Ethereum, as well as emerging altcoins that could see substantial growth over the coming years. The key is patience. Crypto prices can fluctuate wildly, but historically, they have grown significantly over the long term. Reinvest your gains. Whether it's from real estate or crypto, one of the most powerful strategies is to reinvest your gains. With real estate, you can reinvest rental income into new properties or improvements that increase the value of your portfolio. With crypto, you can stake your coins, participate in yield farming, or even trade to take advantage of market cycles. Over time, these reinvestments compound, accelerating your wealth growth. So now that we've covered both crypto and real estate, here's how combining them can work to double your wealth. 1. Balance risk. Crypto can be volatile, but real estate is typically more stable. By investing in both, you're balancing out the risks. When one asset drops, the other may stay steady or even grow. 2. Diversified income streams. Real estate provides steady cash flow through rent, and crypto can give you growth potential through price increases. By having both, you're setting yourself up for multiple income streams that grow together. 3. Long-term growth. Real estate tends to appreciate slowly but steadily over time. Meanwhile, crypto has the potential for higher returns in a shorter period. Combining both means you're giving yourself long-term stability and short-term growth opportunities. 4. Protection from inflation. As inflation rises, both real estate and certain types of crypto, like Bitcoin, can hold or increase in value. This helps you protect your wealth and even grow it during inflationary times. So there you have it, folks. By combining crypto and real estate in your investment portfolio, you're setting yourself up for diversified wealth building. You get the growth potential of crypto and the stability and passive income of real estate. If you found this video helpful, give it a thumbs up. And don't forget to hit that subscribe button for more wealth building tips. Drop your questions in the comments. I'd love to hear what you think, and I'll be happy to help you out. Thanks for watching, and I'll see you in the next video.